Treasurer Scott Morrison is expected to reveal an improved budget bottom line when he hands down his mid-year review today, gaining a revenue windfall from a buoyant jobs market. Economists expect the 2017-18 budget deficit could be about $3 billion smaller at some $26 billion flat or het 2017-18 financial year compared to the $29.4 billion predicted in the May budget. This would follow the final budget outcome flat or 2016-17 being more than $4 billion smaller than earlier forecast. The promise of a surplus by mid-2021 is expected to remain intact. We're making very strong headway on that plan, and we're sticking to that plan, the Treasurer said yesterday. It will be another piece of good news for the government heading into 2018 after retaining Belog in Saturday's by-election and restoring its one-seat majority in the House of Representatives. It follows a year dogged by the ongoing citizenship fiasco, high energy costs, leadership argy-bargy and its continued poor showing in the polls. But Labour expects the report will show the government is still just as out of touch as ever by making huge cuts to universities and their students while pushing for tax cuts for the top end of town and tax hikes for low and middle income earners through the Medicare levy increase. While the Liberals pander to the top end of town at the expense of those who work and struggle, they have no hope of fixing the budget, Shadow Treasurer Chris Bowen and Labour finance spokesman Jim Chalmers said in a statement on Sunday. Taxpayers will be disappointed if they think Mr. Morrison will detail personal income tax cuts as repeatedly flagged by Prime Minister Malcolm Turnbull. Mr. Morrison has been clear details won't be announced in the mid-year economic and fiscal outlook, to give it its formal title, something he sees as more of an update to the main game in May. It allows Mr. Morrison the scope for some housekeeping, such as finding the $75 million for a royal commission into the banks and $100 million to improve roads in the Belog. There is also speculation it will provide the opportunity to scrap some $2 billion in university programs that are up for renewal on January 1 to help meet almost $3 billion in promised savings that have otherwise been stalled in the Senate. National Australia Bank senior economist David D. Garris expects the budget will benefit from an improving domestic economy, flowing to higher tax receipts and lower unemployment support benefits. The recent September quarter national accounts showed the economy growing at an annual rate of 2.8% and running just ahead of the 2.75% predicted by Treasury for the flat 2017-18 year. Westpac senior economist Andrew Hiller expects the government should be able to hit its growth target, even if the mix is different with consumer spending softer and business and public investment stronger. Beyond that, there is more doubt. Home building is turning down and consumer spending a little lackluster, he said. Copyright 9 Digital Proprietary Limited 2017.